there's no easy way to stimulate Chinese consumption, right? So because the asset prices are still going down, in terms of house price, just you mentioned that, it's down single digit once again. And also the stock market is not performing steadily after a brief rally. So I think, people are still having, rather negative sentiment. The jobs outlook, income outlook for many of the Chinese households is still suffering. So I think as a result, even if you want to stimulate consumption by giving out coupons and some discounts, it'll be very difficult. I think right now, primarily the government is trying to, give out coupon and also give the trade-in for people to upgrade their home appliances, for example. But this form of stimulation, actually require Chinese households to spend first to get the discount, right? So in many ways, the government needs to spend up and to drag the economy out of the doldrum, rather than asking the Chinese consumers to do it again as it used to.
Do you believe this would give them more impetus to then roll out some more sort of, I suppose, demand-side stimulus, consumption stimulus, before they even get a clear picture of what Trump's trade policy is actually going to look like?
Yeah, I think in the Politburo meeting, the stimulating consumption, expanding domestic demand is actually put on top priorities. Right, so this is probably the first time in more than 10 years in the Politburo readout, consumption actually occupies such a priority and important space. But then, there's not much detail going on, in terms of how you're actually going to do it. And also, we know that the government has the aversion of, handing out cash and also, lowering taxes, stuff like that. So I think right now, most of us are still waiting, for more details. But because, this is the Politburo meeting is the last sort of important meeting for the year. So then, until next March, we probably won't hear too much details.
How much stock are you putting into the tweaks in the lingo that we got from the authorities last week? Because if you play the sort of language game as to when these sorts of words have appeared before, yes, no doubt we haven't heard things like loose monetary policy since post-GFC, and some of the new language certainly around the counter-cyclical policy as well. But, I've been listening to a lot of economists who sort of argue that, they don't seem to believe that the authorities over in China, particularly the PBOC, had been necessarily prudent in the first place.
Yeah, well, I mean, if you look at the Chinese bond yield, right, so the 10-year bond yield is making all-time low, week after week. It's telling you that, there's substantial amount of liquidity in the system, right? So the system it's not lack of cash. Now, the problem is that, people are unwilling to spend, businesses are unwilling to invest more, right? So, this is the time when you need unconventional policy. You need the government to spend on behalf of the rest of the society. So, I think, twisting words and all that, it's sort of, it has a mildly stimulating effect in terms of, how you encourage the sentiment to come back. But, since 24th of September, right, so the last week of September, we have a whole series of meetings, talking about, different priorities, how to stimulate the economy, how to steady the stock market and all that. But, all in all, it's only the PBOC who has been, loosening monetary policy. And also there's some physical bond issuance details coming out in those meetings. But then, to implement those bond quotas, to actually sell the bonds to the public, so that to raise cash to replenish the government's budget actually takes time as well. Right, so now we're at, the last 2 weeks of the year, we're obviously running out of time.
Indeed. And how, you're talking about seeing another 50 basis points of RRR cuts. I wonder how these RRR cuts really transmit through the system and help the system at this stage. And is it really a tool that the PBOC should resort to at a time when you're not really seeing that much impact and result of that liquidity infusion in the system?
Yeah, the purpose of a RRR cut really is to lend the commercial banks to have more ability to lend, right? So because there's a there's a ratio that you have to stick to, when you make commercial loans. Now the problem is that the loan demand is still very weak. Even though in last month we're seeing financial data showing a small pickup in M1 supply and also a small pickup in home loan, and that is because the housing market, the property market, has a slight pickup in sales in the months of October. But then after that, we're all quieting down again. So I would say that triple R cut is better than nothing. But since we've been cutting triple R for some time now, but business loans fail to expand. So I would say that a triple R cut, it is not too helpful at this stage.
Yeah, it's almost misfiring, right? How? Because at the end of the day, we've come more than halfway when it comes to the triple R cuts that we've seen thus far, and
That's right.
the benchmark triple R rate is, I think, below 7% now, 5.5%, 6%, I would imagine.
That's right.
And so this is just a signaling mechanism which
it's
does
only
not
useful.
have real.
Yeah, it's only useful when you have a substantial loan demand for it, right? So
Yeah, exactly.
when the bank's lending ability is hitting the roof, then you cut triple R, to let the commercial banks lend some more. But just now, the series of data Sam mentioned, right? So we're seeing investment, especially real estate investment, is still down substantially, right? So people shouldn't be surprised to see, the loan demand will remain weak for some time.